Let's have a question on consignment when involving goods sent at invoice price. Ajay of Mumbai consigned to Vijay of Delhi goods to be sold at invoice price, which is represent 125% of cost. So here itself they said that invoice price, which is 125% of cost, is nothing but cost plus 25%. If cost is 100, invoice price will be 125. Vijay is to entitled to a commission 10% on sale at invoice price, which is 25 and 25% of any excess realized over invoice price. It means, let me just tell you what exactly this. Suppose the cost is 100, invoice price is 125. We have said to our consignee, Mr. Vijay has said to Ajay, Ajay is the consigner and Vijay is the consignee. So you can say here, Ajay has said to Vijay, that is the consignee, ki if you sell it at invoice price, we'll give you a 10% commission. So it means cost is 100, invoice price 125. So if invoice price is 125, so if it is selling price, if we'll just see here, for example, let's say selling price is, say for example, 140 rupees. Selling price is 140. So just now I said, if cost 100, invoice price is 125. Because it sets 125% of cost. So if the consignee sold the goods at 140, how much will be his commission? That's very clearly says, he is entitled to a commission of 10% on sales at invoice price. I'll say here, that is invoice price is 125. So you can say 125 into 10%, which comes to 12 rupees 50 paise. Correct? Plus, again on this further they said, he'll get a 25% of any excess realized over invoice price. He sold it for 150. So to encourage him, sell it at a higher price. We have said, anytime you sell above the invoice price, anything over invoice price, on that will pay you 25%. So here you will see, he sold it for 140. So the remaining on 15 rupees will straight away give him 25%. Is that clear? On 15 rupees, straight away 25%. So how much it comes? Now 3 rupees 75 paise. So on invoice price 10% and any excess over invoice price on that 25%. So total commission what he is going to get is 12 plus 3, that is 16 rupees 25 paise. Understood the calculation of what you can say commission? It says 10% on sales at invoice price, that is on 125 rupees, will give him 10%, right, which comes to 12 rupees 50 paise. And any excess over invoice price, that's sometimes we call it as an overriding commission. We call this as overriding commission. So any excess over 125 rupees, on that straight away 25%. So 25% on 15 rupees, which comes to 3.75. So total 16 rupees 25 paise is the commission. So this is the example just to make you understand how the commission will be calculated. Ready? Proceed further. The expenses on freight and insurance incurred by Ajay, the consigner, which is 10,000 rupees for the entire lot. The account sale received by Ajay shows that Vijay has affected sales amounting to rupees 1 lakh in respect of 75% of the consignment. So whatever the total quantity of goods sent, of that 75% has been sold. Remaining 25%. Keep that in mind. His selling expenses to be reimbursed were 8,000, which is the selling expenses they have said very clearly. Obviously, this is the expenditure which is incurred after the goods reaches the godown of consignee. Fine. Further. 10% of the consignment goods of the value 12,500 were destroyed in the fire at the Delhi godown. So where the fire occurred in the Delhi godown. And they said 10% of the consignment goods of the value 12,500 were destroyed. So when they have given 12,500, now the question comes here, is this 12,500 is cost or is it invoice price? Now, of course, for consignee, right, he doesn't know what is our original cost of 100 rupees. He knows it is 125. So he has given a valuation, 10% has been damaged, which is 12,500 rupees. So definitely he has valued it at invoice price. Clear? which is normal loss or abnormal loss? It is abnormal loss. How much? Now 10% of the total consignment. So whatever the goods sent, of that 10% damaged, that is abnormal loss by fire. 75% sold, 75 plus 10, 85. So here itself we concluded there is closing stock, which is 15% of the total consignment. There is closing stock. Proceed further. They said, and insurance company has paid some 12,000 rupees net of salvage. Matlab whatever the recovery they did from the scrap unit or the semi-damaged goods. And insurance company pays some 12,000 rupees. Vijay remitted the balance in favor of Ajay, so final settlement has happened. Prepare consignment account and the account of Vijay in the books of Mr. Ajay along with necessary calculations. So one thing is very clear here, ki boss, what is the total value of goods sent on consignment? Is it given? No. We need to find it out. And that hint is given here. What is that? Now 10% of the total consignment is damaged. How much is the value of that? Now it is 12,500. So when 10% is 12,500, what is the total quantity or total invoice price of goods sent on consignment? No doubt it is 1,25,000, 10 times, because this is only 10%. So that information was hidden, fine, which we have traced it out from the question. So here we go. So very important information first. What is the percentage loading? Now 25% on cost is nothing but the invoice price, which is 125% of cost. Nothing but if cost is 100, invoice price is 125. That is what is given. I have given you my example. If cost is 100, invoice price is 125. So what is the percentage loading on cost? Please try to understand. What is the percentage loading on cost? If I'll ask you the percentage loading on cost, which is 25%. So if I'll ask you what is the percentage loading on invoice price, so please tell me how much is the loading? Now 25 rupees. What is the invoice price? Now 125. So you will straight away say that's 25 divided by 125 into 100, which comes to 20%. This I have already given you the example. So here itself we concluded. What is the percentage loading? It is 25% on cost, which is equivalent to 20% on invoice price. 1/5 on invoice price. 1/4 on cost is equal to 1/5 on invoice price. Clear? So here the loading component is how much? Now straight away you can say, sir, 25 rupees and 100 is the loading component. So 25% on cost is equal to 20% on invoice price. Is that clear? Let's move further. So requirement is, so we have now line out all the point. So here there is abnormal loss. Here there is overriding commission. What is overriding commission? Now we are giving him a commission of 10% on invoice price. And if he sells the goods above invoice price, we are giving him extra 25% commission on that excess amount, on that extra amount. Is that clear? So now move with, we are going to prepare the consignment account. So for which the first working for us to know what is the invoice price of goods sent on consignment. Invoice price of goods sent on consignment is how much? It is 1,25,000. How it is? Now 10% of the goods damaged. And what is the invoice price of that is 12,500. But keep one thing in mind. This is only the invoice price. Abnormal loss will be valued in the similar way as that of closing stock. We'll come to that slowly. Fine. Let's move with the solution. Ready? So have a look. Who is the consigner? Ajay is the consigner. Vijay is the consignee. So here we go. So we will have here books of Ajay, the consigner. We'll have consignment account, and side by side we should have the consignee, that is Vijay's consignee's account. Ready? So move with the question. So first thing is the cost of goods sent on consignment is not given, which we are stressing it out from this particular segment. So move on. Let's go to our working first. So first thing is computation of, okay, this is my working. First page I have taken consignment account, consignees account, and this is my working. Computation of invoice price of goods sent on consignment. So if I'll ask you first thing, what is the invoice price of goods damaged, which is 12,500 given in the question. It's 12,500, 10% of the goods which is damaged. So invoice price of goods damaged is 12,500. Percentage of goods damaged by fire, of course, which is only 10%. So therefore, invoice price of goods sent on consignment, you will say it is 12,500 divided by 10%, or you can say into 10, anything is fine. We'll say 1,25,000, and that they have said very clearly that this is 125% of cost. This is 125% of cost. So if I'll ask you here, what is the cost of goods sent on consignment? You will straight away say, sir, it is 1,25,000 is 125%. So how much is 100? Now, of course, it is 1 lakh. Sir, is there any other alternative? Yes, we have. If I'll ask you, invoice price of goods sent on consignment, which is 1,25,000. And I've already explained you what is the loading component. Loading, they said 25% on cost is equal to 20% on invoice price. Nothing but 1/4 on cost is 1/5 on invoice price. I have already explained you earlier. So loading, straight away, you can say 1,25,000 into 20%, which will give you 25,000. So if I'll ask you what is the cost of goods sent on consignment, is say 1 lakh. There we got, here we got. Third alternative also, you can straight away say, when I say 20% of invoice price is the loading, obviously 80% is the cost. You can straight away also compute cost of goods sent on consignment. You can straight away say, so 1,25,000 into 80%, which will give you same 1 lakh. I have given you 3 alternatives. Do the way you like. 1, 2, 3. So one thing we concluded, first thing, the invoice price of goods sent is 1,25,000, and what is the loading component in that is 25,000. Is that clear? So the first thing in the working note, do the way you like. Done. Go back to the consignment account. So in the consignment account, I'll say consignment account debit to goods sent on consignment. How much? Now 1,25,000. 1,25,000. Clear? Done. Next, immediately, what is the thing? The goods are sent at invoice price. Remove the loading component. How much is the loading component? It is 25,000 is the loading component. Pull it out. So immediately you will say here, reverse the entry. That is goods sent on consignment to consignment. How much? Now 25,000. This is nothing but the loading on goods sent on consignment. I'm just writing it in bracket to give you a better clarity. So, of course, what is the cost of goods sent on consignment? It is 1 lakh. 1,25,000 minus 25. Sir, can I debit only 1 lakh? No, you cannot. Arithmetically, you might be correct, but conceptually, you're wrong. You'll get penalty there. Don't do that in examination. So, consignment to goods sent on consignment 125. Goods sent on consignment to consignment 25,000. Clear? Move to the next. The commission part, we'll just get back to it. We'll let the sales happen first. The expenses of freight, insurance, etc. incurred by Ajay, the consignor, is 10,000. Ready? So here we go. Consignment account debit to cash. Who is incurring? Of course, the consignor. I'll say expense, which is 10,000. 10,000. Ready? Move for the next. Will there be an entry in this account? Of course not. Proceed further. It says the account sales received by Ajay shows that Vijay has effected sales amounting to rupees 1 lakh. So Vijay has made a total sales of 1 lakh rupees, but keep one thing in mind. That is only 75% of the total consignment that has been sold. 75% sold, 10% damaged by a fire. Of course, there is 15% closing stock. Keep all this in mind, right? Fix it. So moving on, 1 lakh rupees of sales. Who has made it? Now Vijay has made it. So journal entry in the books of consignor, Vijay's account debit to consignment. So here we'll say by Vijay's account. In bracket, for your better understanding, let me write in bracket as sales. How much? 1 lakh. Go to Vijay's account debit to consignment. Bracket sales. How much? 1 lakh rupees. Now, he has made a sale of 1 lakh rupees. Now, since he has already made the sale, we have to give him commission. What is the commission agreed? The commission was 10% on sale at invoice price and 25% on excess over the invoice price. So we are just going to consider that. Before that, his selling expenses to be reimbursed were rupees 8,000. He has a selling expenses, right, of 8,000 rupees. Selling expenses, some 8,000 rupees. So here we go. Consignment account debit to Vijay's account. What is that? The expense. How much is that? It's 8,000. It's 8,000. Now, first question to you all. Will it form part of inventory valuation? Answer is no. Will it form part of the abnormal loss valuation? Answer is no. Why? Now, this is the expenses incurred after the goods reaches the godown of consignee. So, it will not form part of inventory valuation nor abnormal loss. So, it means consignees, right? You will see here consignees non-recurring expenses are not given, nothing but the goods, before the goods reaching the godown of consignee, there is no other expenses given. Clear? Proceed. Now, we need to let us compute the, the commission. Ready? Commission, it says 75% of the goods sold, and on this 75%, right, what we are going to do, the 10% the sales at cost, invoice price. Any excess over invoice price will be on which the commission will be paid 25%. So let's go to our next working, computation of commission, right? Commission payable to the consignee. So, computation of commission payable to Vijay. Computation of commission payable. So, if I'll ask you, what is the quantum of goods sold? You can say 75% of the total consignment sold. The total consignment sold. So if I'll ask you, what is the invoice price of goods sold? What will you do? You will say, sir, what is the total invoice price of goods sold? Or the goods which is being sent, 75% of that sold. So total invoice price of goods sent was 1,25,000 into 25%. Right? Into 25%. So check out what is the number. That's the invoice price of goods which is sold. So what is the invoice price of goods that has been sold? it is 75%. Sorry, it is not 25, it is 75%. It is 75%, which comes to 93,750. Of course, rupees. What is the commission we have agreed? Have a look to the question. It says 10% on sales at invoice price and 25% of any excess realized over invoice price. So 10% on invoice price. So here we go. So the commission, so if I'll ask you here, what is the excess sales proceeds? Sales proceeds over IP, that is invoice price. What is the total sales? That's 1 lakh. So 1 lakh minus 93,750, which comes to 6,250. So the commission, it's very clear, the commission totally, it is 10% on 93,750 plus 25% on 6,250. So 10% of 93,750, which comes to 9,375 plus 25% of 6,250. 25% of 6,250, which will give you 1562.5. Right, 25%. So flat. So obviously we're encouraging the consignee to sell it at a higher value, so that consignor will make higher profit. So on that, straight away 25%. So here we go with the total. That will be 10,937.5. Say, let us round it off. It is 10,938. 10,938. Right, which is say 10,938 is the commission payable to Mr. Vijay, the consignee. Is that clear? So here we go. Come over. Consignment account debit to Vijay's account. Consignment account debit to Vijay's account. How much? It is 10,938 is the total commission. It is 10,938. So go to Vijay's account debit. So this is nothing but the commission. And here, Vijay's account debit to consignment. That's the commission, which is 10,938. Done. So we have done the commission calculation. Now, the 10% of the goods which is damaged, which is invoice price of which is 12,500, for which we have received insurance claim, right? And the insurance company paid 12,000 net of salvage. So your next working, what we supposed to do? It is the value of goods damaged. Ready? Have a look. So let's move with the value of goods damaged. Value of goods damaged. What is the percentage? It is 10% of the goods which is damaged. It's given in the question. And always remember, abnormal loss will value it at cost only. No need of taking at invoice price, because just imagine, consignor send one unit at 100 rupees to consignee by loading a profit of 25 rupees. And let's say one unit got damaged. The loss to consignor is not 125 but 100. That is the cost. Why? Now if it will be sold, the 25 rupees profit will be realized. It is not sold, so it is damaged. 100 rupees damaged. So if I'll ask you, what is the value of goods damaged? If you'll see here, what is the percentage? Now it is only 10%. Right? It's only 10% of the goods which is damaged. So if I'll ask you, what is the invoice price of goods damaged given in the question? In fact, from there only we got what is the value of goods that has been damaged. Value of goods which is sent on consignment. So invoice price of goods damaged, which is 12,500, From this, I'll straight away pull out the loading. How much is the loading? I've already said you, 25% on cost is nothing but 20% on invoice price. It's a 20% on IP. This is invoice price. That comes to 2,500. So straight away I can say, what is the cost of goods damaged? Cost of goods damaged, right? It's 10,000. You can, sir, can I do directly? Yes, you can. Sir, can I do straight away 12,500 into 80%? Yes, you can. Sir, can I still do directly? That is 1 lakh rupees is the cost of goods sent on consignment. Of that, straight away 10%. Yes, you can. Choice is yours. Understand the concept first. So with this, cost of goods damaged, 10,000, add proportionate expenses. Proportionate expenses of consignor. How much is the consignor expenses? Have a look. They said consignor has spent some 10,000 rupees towards freight and insurance. So 10,000 rupees is being spent towards freight and insurance. Out of that, only 10% has been damaged. So what is the proportionate cost to that 10%? Here we go. So add proportionate expenses. You can straight away say, so 10,000 into 10%, which comes to 1,000 rupees. So total, if I'll ask you, cost of goods damaged, it's 11,000. Journal entry, abnormal loss to consignment. So go back to your consignment account. I'll say here, you can say abnormal loss. Abnormal loss. Account debit to consignment. How much now? 11,000. Now let me have an abnormal loss account. Even though it is not required in this question, let's have abnormal loss account. So I'll just take here itself, abnormal loss account. So journal entry we have taken, abnormal loss to consignment. How much is that? Now 11,000. How much insurance company has agreed? The insurance company has agreed to pay or paid 12,000 rupees. It has already paid 12,000. How they managed it, that is their lookout. What is the cost of goods damage is 11. Insurance company paid 12 because maybe market price was higher or whatever. That's not our lookout. 12,000 rupees insurance company has paid. So go back to the abnormal loss account. Here I'll say by cash or bank. That's nothing but the claim. Which claim? Insurance claim. How much is that? It's 12,000. So in fact, if you look at this, we have made a profit here of 1,000 rupees that will be separately transferred to the P&L account. Whose P&L? Consignor's P&L. So you can say abnormal loss to P&L. How much? The 1,000 rupees. Balancing figure. So please tell me, suppose the insurance company would have paid only 10,000, then there could have been another loss of 1,000 rupees you could have taken. P&L account you could have debited off the consignor. Here this was not asked, I'm just showing you extra. This is already being discussed in earlier occasions, earlier classes. So here we go. So we have made a profit of 1,000 rupees which will be transferred to the P&L account of the consignor. So abnormal loss valuation, we have done it. Now go back to the question. 8,000 rupees the selling expenses, which is already being considered in the consignment account, and insurance company has received 12. Now they said the final settlement has happened. So now go back, the valuation of closing stock. Ready? Go back. So as you have seen here, out of the total lot of goods which is being sent, 75% sold, 10% damaged. So what is of course the closing stock? Now it is 15% of the total consignment lot. Clear? And keep one thing in mind, out of these are the expenditures which will form part of inventory valuation. Of course, the same thing which you have considered at the time of valuing, the abnormal loss. It is only the consignor expenses. Consignee expenses will not form part of inventory valuation. Clear? So now go back to valuation of stock on consignment, which is 15% of the total lot of goods sent on consignment. Ready? Go back to the working. So you can say here, valuation of stock on consignment. So if I'll ask you, what is the percentage of goods which is stock on consignment? Which is 15%. Why? Which is 15%. Why? I can see here 100% goods sent, 75% sold, 10% damaged, left out is 15%. So if I'll ask you the first thing, remember one thing, closing stock will be valued at invoice price only. So here we go. Invoice price of unsold goods. You will straight away say 1,25,000 into 15%. 1,25,000 into 15%, which will come to 18,750. That is invoice price of goods unsold. That is unsold goods, 15%. This is that invoice price. We need to find out the cost. We have to pull out the loading. Hold on. Clear? Ready? With this, we'll add proportionate expenses of consignor. How much consignor has spent? Now 10,000 rupees for the whole lot. How much is unsold? Only 15%. Ready? 15%. So on 10,000, 15%, which comes to 1,500. So total is your 20,250. But immediately, if I'll ask you, how much is the stock reserve? How much is the stock reserve? You will say immediately, so this 18,750, I can straight away say 18,750 into 20%, which is nothing but 3,750. Or, sir, can I have alternative? Yes, you can. What is the total cost of goods sent on consignment? 1 lakh. How much is unsold? 15%. So what is the cost of unsold good? 15,000. What is the invoice price? 18,750. 18,750 minus 15,000 gives you also same 3,750. Do the way you want. As I said you, or you can straight away say, what is the invoice price of unsold goods? 18,750. Minus, what is the cost? Minus, what is the cost? Now 15,000 will give you 3,750. Right? Or, further, straight away, what is the total loading? Straight away, another working. What is the total loading on the entire consignment? It was 25,000. Out of this, how much is still unsold? Now it is 15%. That also gives you same 3,750. Dear students, there is no specific way. Do the way you want, but do understand the concept. Any manner you do, you must get the same number. You should get the same number. So here we go. We got stock on consignment 20,250, and immediately there is a stock reserve of 3,750. So here you will say, what is the journal entry? Now stock on consignment to consignment. So here we go. We'll say here in consignment by stock on consignment. Right? By stock on consignment. Clear? So you can say here stock on consignment to consignment account. How much is that? It is 20,250. It is 20,250. 20,250. Ready? And further, if we'll just see here, it's 20,250. There is stock on consignment to consignment account 20,250. And immediately we'll say consignment account debit to stock reserve. To stock reserve. How much is that? Now it is 3,750. 3,750. Right? Consignment to stock reserve 3,750. This is nothing but the stock reserve. So in the balance sheet of consignor, how will show? Will show consignment stock, that is 20,250, less stock reserve 3,750. So the balance sheet of the consignor will show it in this way. In the balance sheet, will show, that is on the asset side, okay? In the asset side, you can say stock on consignment 20,250. Ready? And from this, less stock reserve, which is 3,750. Ready? Which will give you, this is 500 and this is 16 and a half. Nothing but 10% of the cost of goods, which is 15,000. I'm sorry, 15% of the cost of goods, which is unsold, is 15,000, and 15% proportionate expenses of consignor. That also gives you 1,500. But while showing in the consignment account, you must show this. What is that? Stock on consignment to consignment 2,250, then consignment to stock reserve 3,750. Clear? Understood? Fine. Now close the consignment account. That will give you now the profit. So just check, if your debit side is credit is more than debit, you will get profit. If you debit is more than credit, then you will get the loss. So in this case, it looks there is a loss. So make the total of the debit side. It is 157,688. And here we go. We'll say by P&L, balancing figure, that's the loss. It's 1,438, the balancing figure. That is the loss on consignment. Who is bearing? The consignor. Now the final settlement happened by consignee to consignor. The final settlement. Now what is the sales it has made? Now 1 lakh. In fact, we have done a small mistake here while doing the posting. In fact, consignment, that is the consignee's expenses as well as the consignee's commission, should be posted on the credit side. Wrongly, I am taking it to the debit side because the entry is consignment to Vijay's account, consignment to Vijay's account, both the places. So in Vijay's account, it should be by consignment. Wrongly, I have taken on the debit side. Kindly rectify the same. We'll say here, in Vijay's account, by consignment, that's the expense, which is 8,000. And again, consignment to Vijay's account, the commission, this was the expense. Again, by consignment, the commission. That is the commission. How much? 10,938. One thing always I'll request, the mistake which I did, you might do the same thing even in examination. So I insist always, be very careful while doing the posting. Here, maybe sometimes a student sitting in front of me can rectify me, but you don't have that option. You can't have that option because this is final. And moreover, this kind of errors will just like that come to your mind. Why? Now, very simple. This is made a sale of 1 lakh, right? His commission is supposed to get 10,938 and he's supposed to take back 8,000 rupees. The expenses what he has paid is to be reimbursed by the consignor. So of course, the difference would be 1 lakh minus this. So of course, I cannot take that. So it is by mistake, even if you do, if you know the subject, if you know the concept, you must come to know this error even at the end. So here we go. The balance amount, it is assumed or it's given in the question, it is being settled finally. So 1 lakh minus 18,938 is the balance amount which will be paid by the consignee to consignor. Journal entry, bank account debit. Either bank or you can say even cash, which is the balancing figure. So check the number. That's the final settlement made by the consignee to consignor. So check the number, please. Right, it is 1 lakh minus 18,938, which comes to 81,062 rupees, which will be finally. So this is nothing but the final settlement. Final settlement. received by consignor from consignee. So the final amount paid by the consignee to consignor, 81,062 rupees. It is 81,062 rupees. So it is being paid by the consignee to consignor. So this is what the final settlement. So please observe what we have done. Goods sent on consignment at invoice price, remove the loading, 25,000. Then 10% of the goods damaged, valued at cost, which is 11,000, considering the cost of goods damaged as well as proportionate expenses of consignor. Closing stock, 15% of the goods is still unsold, which is valued at invoice price, right? Taking proportionate expenses of only consignor, because consignee expenses will not form part of inventory valuation. And from that we have removing the loading of 3,750. Why we have done? This is nothing but the unrealized profit. Why we call it as unrealized? Because it is not yet sold. So tomorrow when it will be sold, the profit will be realized. So in the balance sheet, we'll show 20,250 minus 3,750, as I have shown you already. 16,500 should be the cost of stock on consignment. Right? Next year beginning, we'll show on the debit side, stock on consignment, 20,250, and on the credit side, buy stock reserve 3,750. And next year when it will be sold, the profit will be actually realized, and then that will be transferred to P&L account. Is that clear? So this is what a situation where goods sent from consignor to consignee at invoice price. So these are all the mandatory adjustment we need to do. That is, first, there is the adjustment on goods sent on consignment. Second, the closing stock. Third, if opening stock is there also, you should create the stock reserve. We should take the stock reserve on that on the credit side also. So the actual profit realized, in fact, in this situation, there is a loss of 1,438, which is debited to P&L account. And coming on to abnormal loss goods, 11,000 is the cost of the goods which is damaged, and insurance claim received is 12,000. So we have made a profit of 1,000 rupees, which you have taken to P&L account already. But that will go separately. Final settlement from consignee, 1 lakh is the sales he has made, 8,000 rupees of expenses to be reimbursed, 10,938. One more thing is very clear here, the commission calculation, right? It says 10% on the sales at invoice price. And that comes to 93,750 on that 10% you have taken. And any excess over that on 6,250, we have considered 25%. And that's called as overriding commission. So 10,938 is the total commission payable to consignee, and final settlement received from him is 81,062 rupees. Fine. So this is what a situation where the goods sent to from consignor to consignee at invoice price. Understood? Thank you. Dear students, let's have a complete problem on preparation of amended cash book. Okay, in detail, we'll just go for this. It is a complete problem. On 30th December 2017, the bank column of Mr. X cash book showed a debit balance of 4610 is nothing but the balance as per cash book, 4,610 debit balance, so positive balance. On examination of the cash book bank statement, we find the following adjustments. Here the requirement of the question is that we have to prepare a amended cash book and also a BRS. I'll take you one step ahead here. Let's first prepare a bank reconciliation statement before preparing amended cash book. My objective is to show you that when you prepare a BRS without doing amended cash book, how it looks like, or how exactly you need to prepare it, which is known to you already. Second, after preparing amended cash book and considering that balance as the starting point, how to prepare the BRS. Keep one thing in mind, under both the situation, whatever balance as per passbook you are getting, it should remain the same. It has to be the same. Of course, this balance as per passbook cannot be different. It remains the same. So let's take up this. So what I would insist here, let's first prepare a BRS, right? Let's first prepare a bank reconciliation statement, that is before preparing amended cash book. Is that clear? A regular way how we prepare BRS, let's go with that first, right? So I'll just take you one step ahead here. It says that 30th December 2017, the bank column of Mr. X cash book showed a debit balance of 4,610 rupees. So balance as per cash book 4610. That's my starting point. So let's do a BRS before preparing amended cash book. Is that clear? Start. Now we'll just see here. So BRS of Mr. X before preparing amended cash book. So we'll start here. That is bank balance as per cash book. Bank balance as per cash book. How much was that? It is 4,610 is the balance as per cash book. So it is 4610. 4,610. With this, we'll just start with the adjustments one by one. Checks amounting to, it said checks, multiple checks. 6,30,000 which were issued to trade payables and entered in the cash book before 30th December were not presented for payment until that date. It says check amounting to 6,30,000 which are issued to trade payables. What is this trade payable? Yeah, nothing but suppliers, creditors, which is payable, right? To whom the amount is payable. It's creditors and suppliers whom 6,30,000 rupees of check has been issued. So please tell me, the moment check has been issued, the moment we have issued the check, right? The moment we have issued the check, balance as per our cash book reduces. Whereas balance as per passbook is still higher. I'm starting from cash book, reaching passbook. Is that clear? Starting from cash book, reaching passbook, I must add 6,30,000. What is that? A check issued but not presented for payment, 6,30,000. So here we go. You can say with this you add check issued but not presented. Not presented. Obviously for what? For payment. Not presented for payment. Amount is 6,30,000. Fine. So normal BRS. No speciality, no difference. Move on to the next. It said checks amounting to rupees 2,50,000 had been recorded in the cash book as having been paid into the bank on 30th December 2017 but were entered in the bank statement on 1st of January 2018. So it means checks amount to 50 had been recorded in the cash book as having been paid into the bank. See the wordings, right? It said check amounting to 2,50,000 has been recorded in the cash book as having been paid into the bank. What does it mean by paid into the bank? It means check received, right? Deposited, right? Paid into the bank, nothing but we have deposited in the bank on 30th December but were entered in the bank statement on 1st of January. It means the amount is only credited on 1st of January. What is the amount? Now 2,50,000. This is nothing but your similar thing. What is that? Now check deposited but not credited. How much? Now 2,50,000. Ready? So the moment we have received the check and deposited in the bank, we recorded that in our cash book. Balance as per our cash book is higher. Whereas balance as per passbook is still lower, right? I'm starting from cash book, reaching passbook. So you can say check deposited but not credited, 2,50,000. So here we go. You can say less check deposited but not credited. Not credited. What is the amount? We'll just see it says 2,50,000. So 2,50,000 rupees of check which is deposited but not yet credited, 2,50,000. Done. So move on. So it's 2,50,000 which need to be subtracted. Either put it in a bracket and then take the total. Anyway, it is one and the same, which is subtraction. 2,50,000. Next, A check for rupees 73,000 had been dishonored prior to 30th December, but no record of this fact appeared in the cash book. So it means what has happened? A check for 73,000 had been dishonored. What does it mean? We have received the check, we have recorded in our cash book, sent it to the bank, deposited, but later on it proved to be dishonored. In the sense, the person who has given the check to us, some defect, maybe fund is not there in his account, it is not signed, amount in rupees, amount in what is not matching. Due to various reasons, the check has been dishonored. So imagine, when we have received the check already, when you have already received, we have already recorded in our cash book. We have already increased our cash book balance by how much? Now 73,000. But bank has not given the credit. Why? Now it has been dishonored. So balance as per our cash book is higher. Passbook is lower. So check deposited but dishonored. But we don't know. It has been dishonored. They said dishonored prior to 30th December. It has been dishonored already. But we don't know. When we came to know that? When you got the passbook. So balance as per our cash book is higher. Passbook is lower. How much? In a 73,000. Ready? So moving on. So we'll subtract here. Check deposited. Check deposited and dishonored. Right? The amount, it is 73,000. Check deposited and dishonored, it is 73,000. Right? 73,000. Move with the next transaction. A dividend of 3,80,000 paid direct to the bank had not been recorded in the cash book. So who has paid? We said paid into the bank directly. It means we have some kind of investment in some companies, right? Some shares. Dividend has come to our bank account. Amount 3,80,000, which has already come to our account, 3,80,000. It's being credited to our account. It's being credited to our account. How much? 3,80,000. So where it has come? Now in the bank passbook. Whose money? Our money. But it's not recorded in cash book. The credit has already come in the passbook, in the bank statement. So balance as per passbook is higher. Cash book is lower. Is that clear? Starting from the lower one, reaching the higher one. What is the amount? Now 3,80,000. Dividend received directly by the bank. 3,80,000. Credit has come to the bank account. So here we go. You can say add dividend received. Dividend received by bank, which is of course not recorded in cash book. What is the amount? It is 3,80,000. Ready? So it is 3,80,000. Fine. We are doing this normal BRS only, no speciality. Fine. Proceed further. Bank interest and charges, right, amounting to rupees 4,200 has been charged in the bank statement but not entered in the cash book. So it is interest as well as bank charges charged by the bank. As you have already observed, banks sometimes give us credit of interest. When you have money in the bank, bank gives us interest. But here they said interest has been charged. Reason? We don't know. There could be sometimes bank must have given us a temporary overdraft or some reason. Bank has charged interest as well as bank charges 4,200. So when bank has charged this, when bank has debited our account, balance as per our cash passbook is lower, whereas cash book is higher. Why? It is recorded only in the passbook. What is the amount? Now 4,200. Balance as per passbook is lower, cash book is higher, starting point is cash book, reaching point is passbook, subtract how much? Now 4,200. So you can say interest and bank charges. Interest and bank charges charged by the bank. Charged by the bank. What's the amount? It's 4,200, right? So 4,200 need to be subtracted. Done. Next. Further it says, No entry had been made in the cash book for a trade subscription of 10,000 paid by banker's order in the November 2017. What is this? Made in the cash book. No entry has been made in the cash book for a trade subscription. For example, we are member of a particular trade association for which you have to pay, let us say, yearly subscription, some 10,000 rupees. Who? Now, Mr. X. And it is being paid. Instead of we giving check every year, we have given a standing instruction to our banker, please do make this payment directly. And bank has made the payment. We came to know that when we received the bank statement. So 10,000 rupees of amount of trade subscription paid by the bank directly on behalf of Mr. X, the customer. So the moment it is being paid by the bank, balance as per passbook has gone down. Whereas cash book balance is still higher because the payment is done by the bank, starting with the higher one, reaching the lower one. What are you supposed to do? Now subtract 10,000. What is that? Now trade subscription. You can say here, trade subscription. Trade subscription paid by bank. It is 10,000. Paid by bank directly. So 10,000 rupees. Ready? So which need to be subtracted. Why it is paid by the bank? Passbook balance is lower. Next. A check for rupees 27,000 drawn by Mr. Y had been charged to Mr. X bank account by mistake in December 2017. Who has done this mistake? Now the bank. In fact, Mr. Y has given a check for 27,000 to his supplier, but bank has wrongly made the payment from Mr. X account. It is a mistake, will be rectified, but as of today, what has happened? The bank has made a payment of 27,000. So it is nothing but a payment drawn amount, it's a check drawn by Y, but it has gone from Mr. X account. It means somebody else check, right? Somebody has issued check from his account, but the money has gone from our account. So of course what happened? 27,000 rupees of payment which has wrongly gone from the bank statement, in the sense paid by the bank, right? It is paid by the bank, wrongly recorded in X account instead of Y. So what is the balance as per passbook is lower by how much? 27,000, whereas cash book balance is, what you can say, higher. So here you say wrong debit. Why I call it as a wrong debit? Now bank has made the payment from our account, which is actually not a Mr. X payment or our payment. So wrong debit given. You can say wrong debit given by the bank. Wrong debit given by the bank was the number? Now 27,000. It is 27,000. Is that clear? So now moving on. Requirement of this question. You are required to make appropriate adjustment in the cash book, bringing down the correct balance. And second, to prepare a statement reconciling the adjusted balance in the cash book with the balance shown in the bank statement, which I have already explained. That is what the requirement of the question, which you are just taking. But I have just taken you one step back in the sense, first we are preparing a BRS with the existing information. There is a BRS much before, right? Much before preparing the amended cash book. So we have taken care of all the adjustments here. Now moving on, what is the balance as per passbook? Now moving on here, it is 6,30,000 plus 380, which comes to 10,10,000 to be added. Ready? Make the total of all this. 2,50,000 plus 73,000 plus 4,200 plus 10,000 plus 27,000. Add the total. The total is 364,200. Need to be subtracted. Ready? So with 4610, add 10,10,000 minus 3,64,200. Do the addition subtraction. You will find out the number. That is, how much is the balance as per passbook. So the balance as per passbook is 6,50,410. 650,410 is the balance As per what? Now, of course, this is the balance as per passbook. So here we go. Balance as per passbook. Balance as per passbook. How much is that? Now 6,50,410. 650,410 is the balance as per passbook. Clear here? So one thing you just observe here, I have just prepared a regular BRS, what we do prepare normally, right? What we do prepare normally. And we found out the balance as per passbook, it is 650,410. In fact, this was not required in this question, but I intentionally took you to this segment first. A BRS before amended cash book. Is that clear? The next, what we are going to do, now we'll prepare the amended cash book. We'll first do now the amended cash book and do the adjustments in the cash book wherever necessary. Fine? And then find out the revised balance as per amended cash book. And then, right, with that revised balance, we'll prepare one more BRS. So what we'll do now, we'll prepare the amended cash book. Find out the revised balance as per amended cash book, take that as the starting point and then do the BRS. In fact, that is what was required in this question, right? So what we are going to do, now we are just going to prepare now the amended cash book. Done? So moving on. So the question remains the same, right? What we need to do, take from this question, check out whichever the items require adjustment in our cash book. Do the adjustment of the same in the cash account, the bank account in the cash book. Find out the revised bank balance as per amended cash book. Ready? Move. Now I will just see here, where it's a bank balance as per cash book, it was 4,610, which is already there, right? Bank balance as per our cash book. Now moving on. So let's have now the cash book, the amended, that is the amended cash book, nothing but the bank account, which you are going to prepare. As per our bank balance, that is bank balance as per our cash book, it was how much? Now 4,610, what balance it was? Now debit balance. So I'll just start with the same number. There is two balance brought forward. It was 4,610. 4610 was the balance as per our cash book. Now let's go through the question one by one. I have already said you what exactly you need to do. Now find out or check each and every item and ask yourself one question. The question is, does it require any adjustment at our end or my end? If answer is yes, need to be recorded in the cash book. Let's go with the first item. Checks amounting to rupees 6,30,000 which are issued to trade payable and entered in the cash book before 30th December but were not presented. So please tell me, when we have issued the check, we have already recorded that in our cash book, right? We have already passed the journal entry, supplier's account, debit to bank account, that particular job is done. Now, when the check is not presented for payment, do we need any adjustment in our book? No, we are not supposed to do anything. The reason? We have done our job. We have given the check. The person who has taken the check, it is his responsibility, go to his bank, deposit it, clear the money, or take out the money from our account. What he has not done, or maybe he has deposited the check in his bank account, it will take maybe another 1 or 2 days to go out. The money has to go out from our balance. So first question, does it require any adjustment at our end? Answer is no. So will it come to the amended cash book? Answer is no. Is it something like this? We have given the check to our supplier. He has deposited in his bank account. Money has not gone from our account. So when you came to know that he has not taken out the money from our account, will you reverse the entry? No. Our job is done. So will it come to amended cash book? Answer is no. It won't come to amended cash book. Next item. Checks amounting to rupees 2,50,000 had been recorded in the cash book as having been paid into the bank on 30th of December 2017, but were entered in the bank statement on 1st of January 2018. What is that? Now check received, deposited in the bank, but not yet credited. The credit is not yet, it has come to our account. So when the amount of credit has not come to our account, does it require any adjustment entry at our end? Is this check dishonor? No. Will the amount come to our account? Yes, it will come, maybe after 1 day, maybe after 2 days. So it is given, the amount has come on 1st of January. So it is only a timing difference, right? The money is coming to our account, but not today, maybe tomorrow. So on 1st of January, the amount has been credited to our account. So please tell me, on 30th December, does it require any adjustment entry at our end? Answer is again no. It won't come to our amended cash book. Is that clear? So check issued but not presented for payment, check received but not credited, or deposited but not credited, none of this will come to our amended cash book. Clear? Because we have done our job, what we supposed to do. Move with the next item. A check for 73,000 has been dishonored prior to 30th December 2017, but no record of this fact appeared in the cash book. So 73,000 rupees of check we have received, we have deposited in the bank, but the amount is not credited to our account. Will it come tomorrow? No. Is it dishonor? Yes, it is dishonor already. So just think of when it is dishonor, now much before 30th December itself. But the intimation of the same came to us when we prepared the BRS. When you got to know, when you got the bank statement, we came to know that there is a check which was deposited and it is being dishonored. So please tell me, does it require adjustment in our books of account? Of course, yes. Does it require to be recorded in our book? Definitely yes. Reason, when you receive the check, let's say it is received from the customer. How much? 73,000. What is the entry we must have passed? The bank account debit to respective customer or party's account from whom we have received it. Now the check has been dishonored. What are we supposed to do? We need to reverse that entry. We need to record that in our, because when you receive the check and deposited, we have already recorded in our cash book, we have already increased the balance. It need to reduce. Why? The check has been dishonored. So will it come to your amended cash book? Will it be recorded in our amended cash book? Of course, yes. It will be recorded in the amended cash book. What will be our entry? As I said, when you receive the check, we said customer account debit, right? I'm sorry, bank account debit to customer, reverse the entry. So here we go, right? We'll say here in cash book bank account, you can say by the customer or the respective party, whoever it is, whoever has given the check, his account. So I can say by party's account, whatever it is, whoever account it is, right? We debit immediately the customer or the respective party and credit the bank with what amount? It is 73,000 rupees. So here we go. 73,000 got credited in the bank account. Clear? Move with the next adjustment. A dividend of rupees 3,80,000 paid directly to the bank had not been recorded in the cash book. So dividend has been received. Whose dividend? Our dividend, nothing but Mr. X dividend. Is it our income? Yes, it is. To be recorded in our book? Of course, yes. Need to be recorded. So is it our income? Yes. So when you receive the dividend, when the dividend has come, will it be recorded as the income for the respective year? Yes, it is. So we're supposed to pass a journal entry here. What is that? A bank account debit to dividend income. This is our income, need to be recorded and increase the bank balance as per cash book. Done. So immediately go to your amended cash book. Here we'll say bank account debit to dividend. Okay, for your better understanding, I'll say dividend income. You can just say to dividend income, to dividend received, whatever it is our income to be credited. The amount, it is 3,80,000. Ready? So here we go. It is 3,80,000. Done. Next. Bank interest and charges amounting to rupees 4,200 had been charged in the bank statement but not entered in the cash book. So is it our expenditure? Yes, it is. To be recorded? Of course, yes. We need to record that in our books of account because earlier it was not recorded. We were not knowing that. Once we received the bank statement, we came to know there is 4,610 rupees, 4,200 rupees have been charged by the bank, right? Interest as well as bank charges. So they have already reduced our balance. We need to record that in our cash book. How much is that? Now 4,200. So here we go. Go to your amended cash book and say journal entry, either you call it as interest or bank charges account debit to bank. So here we go. You can say by interest and bank charges, which is our expense, need to be recorded. It's 4,200. Next, no entry had been made in the cash book for a trade subscription of 10,000 rupees paid by bankers' orders in November 2017. So trade subscription paid by the bank on whose behalf? On our behalf. Is it our expenditure? Yes, it is. Need to be recorded in our cash book? Of course, yes. Do record it. Right? So we are going to record this as our expenditure. How much? Na 10,000 rupees of trade subscription, journal entry, trade subscription or trade expenses account, debit to bank. How much? That is 10,000. Record it in the cash book. So here we go. Trade subscription account debit to bank. So in bank account by trade subscription. By trade subscription, it is 10,000. Done. Next adjustment. A check for rupees 27,000 drawn by Y had been charged to Mr. X, right bank account by mistake in December 2017. Whose mistake? Banker's mistake. Right? Who has made the payment wrongly? That is what, who has debited the account of X wrongly? It is the bank who has done this mistake. So when bank has done this mistake, it is the bank responsibility to rectify it. So does it require any action at our end? Answer is no. It's not our mistake, nor it is our thing. We'll just intimate maybe to the bank immediately because the amount has gone from our account. So had it been a credit in our account, you could have kept quiet for some time because the money has come to your account. But in this case, the amount has gone from our account. So immediately you'll call to the bank manager and ask him, how dare you to take the money from my account or etc. etc. So immediately what happened? The moment you call to the bank, it is their responsibility to rectify it. But the question here, does it require any book entry at our end? Action to yes. What is that action? I call to the bank and intimate them, yeah, there is a mistake. But does it require an entry in our books of account? Answer is no. Because there is none of our mistake, nor any action or any book entry is required at our end. Only thing is that you should intimate to your banker. So does this require to be recorded in the cash book? Answer is no. So now with this we completed all the adjustment. After discussing or checking with all the adjustment, we are only recorded those items which required action as well as to be recorded in our books of account, which is recorded in the amended cash book. Clear? Now move on to the amended cash book. Here we go. So take the total. The total which comes to 380 plus 4, 384, 610, and this also should be same 384, 610. So debit side balance is more. So here we go. You will say here by balance carried forward or carried down, whatever your balancing figure. So do the calculation and tell me what is the number that is the difference in the credit side, that is the debit is more. What is the balance? Check the balance. It is 297. 410. 2,97,410 is the balance right now in our amended cash book. So please tell me, how much was the balance in cash book before this? Now 4610. Before preparing this amended cash book. After completing the amended cash book, what is the balance become? Now 297,410 is the balance as per amended cash book. So which is the balance? You're going to show it in your balance sheet. It is 2,97,410 is the balance which will be shown in the balance sheet. That is the balance as per bank account. So it means what amendment we did, what is amended cash book? Nothing but the modification, the changes. The changes, whatever was desired to be done at our end, we have done it. And after that, we got to know the balance as per cash book is how much? Now 297,410. This is the amended balance, the revised balance, the changed balance. Now what is my next step? We will prepare a BRS now. considering this balance as the starting point. Is that clear? So now we'll prepare the next, a BRS, right, a bank reconciliation statement, considering the amended cash book balance as the starting point. So we'll take this as the starting point and move with the bank reconciliation statement. So next step, let's move with preparing a bank reconciliation statement considering the amended cash book balance as the starting point. So now the question, right, you will just see in our first bank reconciliation, the statement what we prepared. How much was the balance as per cash book we had? Now 4610. We did all addition subtraction in the regular manner as you do at the time of BRS, and we came to know balance as per passbook how much? Now 65410. So the question was that time, what is the bank balance to be shown in our balance sheet? Is it 4610 or 65410? None of this. Then which is the balance we are going to show it in the balance sheet? It's nothing but balance as per amended cash book. That we have already got. How much is the balance as per amended cash book? The balance as per our amended cash book is 297410. That is the balance as per amended cash book. Now let's move with a BRS, right? Starting with the balance as per amended cash book. Remember one thing, before I start here, I insist that after completing your BRS, you must get the same balance as per passbook what you have already got in the first bank reconciliation statement. We'll cross-verify that at the end. So let's move with the next BRS, next bank reconciliation statement. So let's start with the BRS of Mr. X, considering the amended cash book balance as the starting point. As I said you, how much you have got the balance as an amended cash book? Now 2,97,410 is the balance. We'll start with that. I'll start here. Bank balance as per amended cash book. As per amended cash book, it is 2,97,410. 297,410 was the balance as per amended cash book, and that's the starting point now to prepare the BRS. Ready? Now go back to the question. The first item, checks amounting to rupees 6,30,000 which were issued to trade payable. So in short, since you already know this, check issued but not presented for payment. What's the amount? Now 6,30,000. Check issued but not presented for payment, 6,30,000. So please tell me, right? Check has been issued. We have done our job. Balance as per our cash book is lower. Balance as per passbook is higher. Now my question is, have you taken this item in the amended cash book? No, because it was not requiring any adjustment at our end. So we have done our job. When you issued the check itself, that time itself we have done our job. So please tell me, now will this item still creates a difference in the balance as per amended cash book and passbook? Try to understand. I am talking now amended cash book, not the cash book. This cash book balance was 4610. But I am starting with balance as per amended cash book. Now do compare amended cash book with the passbook. Clear? Now moving on. So we'll just see here, a check issued but not presented for payment. The first question, is it still creating, or is it still due to this? Is there a difference in the balance as per amended cash book and passbook? Answer is yes. How much is that? Na 6,30,000. Balance as per our amended cash book is lower. Balance as per passbook is higher. How much? Na 6,30,000. So try to understand, starting from amended cash book, reaching the passbook. Starting from the lower one, reaching the higher one. What are you supposed to do? Now add off 6,30,000. So here we go. You can say add check issued but not presented. Check issued but not presented. For what? Now, of course, it is for the payment. Number please, it's 6,30,000. 6,30,000. So here we go. Add 6,30,000. 6,30,000. Ready? Move. Next item. Check amounting to 2,50,000 had been recorded in the cash book as having been paid into the bank is nothing but check received, deposited but not yet credited. So in short, check deposited but not yet credited. So please tell me, have you taken this item in the amended cash book? No. Why? Now we have done our job when you have sent the check to the bank. We have already deposited that in our account. We have already considered that in our, the cash book much before the amendment. So please tell me, is this item still creating or is this still a reason for difference in balance as per amended cash book and passbook? Yes, it is. What has happened? The balance as per our cash book is higher because you have deposited the check, right? Whereas the balance as per passbook is lower, starting from amended cash book balance reaching the passbook. What I am supposed to do? Now regular adjustment, 2,50,000 need to be subtracted. So here we go. I'll say here less check deposited but not credited. Check deposited but not credited. Numbers please. 2,50,000. It's 2,50,000 need to be subtracted. Clear? Go to the next item. Move with the next item. A check for 73,000 had been dishonored prior to 30th December. So please tell me, all of you, now be alert. When we receive the check and we send it to the bank for deposit, we have already passed one entry. When? Now much before amendment. What was that? Now bank account debit to customer account or respective party's account. We increased our balance. And when you got the bank statement, that time we came to know the check has been dishonored. So when you came to know that, immediately what we have done, now if you'll just have a look in the amended cash book, if you'll have a look here in the amended cash book. So in the amended cash book, what we have done, we have taken by customer or party's account. So just think of, when you have received the check, we already increased our balance as per our cash book. And when the check got dishonored, and we came to know that after receiving the bank statement, we immediately credited the bank. So please try to understand. In earlier occasion, we have increased the balance when you received the check. When you came to know it is dishonored, we reduce our bank balance itself, that is as per our cash book. So please tell me, earlier we have increased the balance when you deposited the check. When you came to know it is dishonored, we reduced the balance as per our cash book. So please tell me, we have done the job at our end, what we supposed to do? Yes. Now, is this item still creating a difference in balance as per amended cash book and passbook? Answer is no. So try to understand. When we received the check, imagine this is the cash book and passbook. Both the balance were equal. We received the check. When you receive the check, we increase the balance as per our cash book. The passbook balance is the same at the same level. But when we come to know it is dishonored, again we reduce our cash book balance. We brought both up to the same level. So will it come to the BRS again? Answer is no. Why? Now this is no more a difference. This is no more a reason for difference in the balance as per cash book as well as passbook, because we have done the adjustment at our end. So will this item goes to the BRS anymore? Answer is no. In fact, the object of preparing BRS was this, right? So we have done all the changes what we are supposed to do in our books after getting the bank statement. Clear? Next item. Move on to the next thing. You can say dividend of 3,80,000 paid direct to the bank, not been recorded in cash book. So please tell me, earlier, before preparing amended cash book, what was the situation? Imagine, both are same balance. Whereas passbook, the amount has been credited. The amount has come to the bank statement, that is come to the bank passbook. So balance as per bank, it was more. Cash book was still lower. After we came to know that there is a dividend income, we recorded, right? If you'll have a look here, we recorded the dividend income here. So now we increase even the cash book balance. So both passbook and cash book at par, same level. Because earlier there was a difference, now the difference is nullified. The difference is taken care of, right? So this particular item is no more a reason of difference in the balance as per amended cash book and passbook. What I said? Amended cash book balance and passbook balance. So will it come to the BRS? No, because there is no more a reason of difference between balance as per amended cash book and passbook. The reason, the moment we recorded this in the bank account, that is in our cash book, balance as per our cash book have increased. So both the balances, cash book and passbook, came to par. Clear? So it won't come to the BRS. Next, bank interest and charges amounting to 4,200 had been charged in the bank statement. So bank has charges, interest as well as bank charges. So when they charge us, balance as per our passbook was lower, cash book was higher. When we came to know that there is a charge, immediately what we did, we recorded that in our amended cash book. We said by interest and bank charges, we reduce our cash book balance also. So please tell me, earlier passbook balance was lower, cash book was higher. Why? Now the payment had gone from the passbook. Now what I did, I reduced even the cash book balance. So both are at par. So is this item any more a reason of difference, as that is balance as per amended cash book and passbook? Answer is no. It is no more a difference. So will it come to the BRS? It won't come to the BRS. Is that clear? It will not come to the bank reconciliation statement. Next, it says no entry had been made in the cash book when? Now prior to amended cash book. For a trade subscription of 10,000. Who made the payment? Now bank made the payment. On whose behalf? On our behalf. So when bank made the payment, they reduced the balance as per passbook. And when we received the bank statement, we came to know there is a 10,000 rupees of trade subscription. And the moment we came to know there is a 10,000 rupees of trade subscription, immediately what happened? We recorded in our cash book. We say trade subscription account debit to bank. We reduce the balance as per our cash book. So when you reduce the balance as per our cash book and we are doing the BRS, considering the amended cash book balance as the starting point. So just imagine, earlier passbook balance was lower. Why? The payment was made by the passbook, or it is made in the passbook. The cash book was higher. Now we reduce even the cash book balance. So that this item, after preparing the amended cash book, is it any more a reason of difference between balance as per amended cash book and passbook? Answer is no. Will it come to the BRS again? Answer is no. It won't come to the bank reconciliation statement. Is that clear? Next, and the last item. A check for 27,000 run by Y had been charged to Mr. X bank account. So 27,000 run by Mr. Y had been charged to Mr. X account. So please tell me, is it our mistake? No. Does it require any adjustment at our end? No. Have you considered this in your amended cash book? No. So you can see here, I have not considered that in the amended cash book. It's a mistake of the banker. So banker has to rectify themselves and they'll do that also. But does it require any action in the amended cash book? Answer is no. So now the second question, is it still a reason of difference between balance as per amended cash book and passbook? Of course, yes. Why? The mistake is still continued. Mistake is still there, right? So balance as per the moment the payment has been made excess, that is the payment has gone from our account. Balance as per our passbook is lower, cash book is higher. Starting point is amended cash book. Starting point is amended cash book. So my starting point is the amended cash book. Ready? So this item is still creating a difference in the balance as per cash book and passbook. Is that clear? So what is the number? You can say 27,000 rupees. Who was paid? Now the bank has made the payment. So our job is, so balance as per passbook is lower, amended cash book is still higher. You can say here, so I'm starting from amended cash book, the higher one, reaching the lower one. I'll say wrong debit given by the bank. It is how much? 27,000. Right? Clear? So 27,000. After doing this, so 297,410 plus 6,30,000 minus 2,77,000, which will give you the balance as per passbook. So please do the addition subtraction. It is 6,50,410. What is that? This is the balance as per passbook. The balance as per passbook. How much? 6,50,410. So now I would insist, let's compare the first BRS and this final BRS. The first BRS where we started with balance as per cash book, and this BRS where we started with balance as per passbook. So just check one by one. What is the balance as per passbook? Now 6,50,410. Check in the first BRS. The balance as per passbook was 6,50,410. So kindly check what is the number of adjustment we did. It is 2 plus here it is 5. So altogether 7 items we did the adjustment. Imagine out of this 7 item, right? If you'll have a look to your amended cash book, right? You will see 1 and this side you have some 3 items. So 3 plus 1, right? 4 items which is already being adjusted. So after adjusting this 4 item, the remaining item still continued. That is in the amended, the BRS when you prepare with amended cash book. So the balance, when you just move with the amended cash book balance as the starting point to prepare the BRS. In that BRS, we started with this 2,97,410. Left out all this item which has now come over to the amended cash book because it is being taken care of. It is being adjusted. Only the remaining part which is still continued to be part of the BRS. And in that BRS also, we got the same number of balance as per passbook, what we got in the first bank reconciliation statement. So, you can see here, the balance as per amended cash book, it is 297,410. And when you prepare the BRS, considering this is the starting point, and how much is the balance as per passbook becomes? So, balance as per passbook, 6,50,410 is the same number what you have got in the first BRS, that is the first bank reconciliation statement which you prepared today, that is before preparing amended cash book. Is that clear? In fact, this is the object of preparing BRS is what? That you know what is the bank balance to be shown in balance sheet. It is 297,410. That is the bank balance to be shown in balance sheet. And how much is the balance as per passbook? 650,410. In both the occasion, the balance as per passbook will not change. But my BRS is slightly different. First BRS, whatever item I took the adjustment, out of that a part of these transactions, a few transactions there already considered in the amended cash book, only the remaining items comes to the BRS. That is which BRS? The BRS with amended cash book. So now finally, what is the bank balance to be shown in balance sheet? It is 2,97,410 is the balance to be shown in the balance sheet. That is the bank balance to be shown in the balance sheet. So this is the object of preparing amended cash book. Thank you.